So we have been chatting about tokenization and stablecoin and all of this
Mm-hmm.
stuff for the last few episodes now. So it begs the question, like, why does it really matter? Like,
Right.
why talk about tokenization? Why use it? Like, and most importantly, like, is this some like crazy crypto scammy idea that is going to like
Mm.
be huge, big for like a couple of months, and then the bubble is going to burst, and
That's the
yeah,
first question people get.
yeah, yeah, but that's the fun of tokenization, because like for the first time, crypto people have figured out something that's actually going to be very, very relevant, like
Right.
after Bitcoin. The idea of tokenization is essentially going to change the back end of how traditional finance works.
True.
Yeah, traditional finance has been built on this inefficient structure that is restricted and constrained by so many external factors. Like,
Mm-hmm.
I think that the silliest of them all is like the market is only open for 8 hours. The 16
Right.
other hours it's completely closed, and then there are different markets in different time zones. So like the London market, the Hong Kong market, and the US market will never be in sync.
Right. Yeah.
So if
Exactly.
you yeah, so if you are an international high frequency trader, what do you do? uh,
Right.
and that's where tokenization comes in. And it's, I mean, the problem that I mentioned right now is a very slight, like an insignificant problem in terms of in the scale of what tokenization is actually going to solve, time
Mm-hmm.
zone issue being like one of the smallest ones. So yeah, this is one of the most exciting things that I have been spending a lot of my time in. And yeah, so let's get into the asset classes that tokenization is going to revolutionize forever and why it matters. Now, obviously, in the last episode we have already covered the basics of what tokenization
Mm-hmm.
is. The use, we have glossed over the use cases slightly as well. So for this episode we are going to like go deeper into each of the asset classes and look into like
Gotcha.
who is dominating these asset classes and what the end game is going to look like. So for our listeners, if you haven't listened to the previous episode and you are very new to the idea of tokenization, maybe it's a good idea to listen to that one first before
Yeah.
you yeah, before you start going through this one. All right. So that being said, let's talk about the categories of tokenization. Right, there are categories of tokenization. Is, I mean, the asset classes. It's the same categories that exist in traditional finance. And by traditional finance, to people who work in general finance, it's just
Right.
finance. Like it's just crypto people call it traditional finance. So at the very first, the introductory layer, if you could call it, it's a stable coins, because whenever you are interacting with an asset in blockchain, you need a
Mm-hmm.
cryptocurrency to deal with it.
Right.
And that cryptocurrency is going to be your stable coins, your
The
USD
digital cash.
denominated. Yeah, exactly. It's your digital cash. It's either your USD denominated stable coins, which is
Mm-hmm.
mostly vastly the most popular one, and then you have some euro dominated, some yen dominated stable coins as well. So yeah, so what does the stable coin do? The stable coin imitates a fiat currency, but it's on a blockchain. That's pretty
Mm-hmm.
much it. There are different kinds of stable coins, like there's the USDT, which is by far the most dominant one. Then
Yeah.
you have USDC, and then there's some other smaller currencies like PYUSD, FDUSD. Like US President Trump launched his own stable coin called USDY.
Right.
So, like there are all these kinds of stable coins that are coming into the market, and the size of the stablecoin market right now is at about 245 $250 billion. So that's not an insignificant number by any means. Actually, let me share my screen
Yeah.
so I can show you some specific data on stable coins. Yeah, so as you can see here, like the market cap right now is at 241 billion. Monthly
Mm-hmm.
transfer volume is at like it's past $2.69 trillion.
Damn. Jesus
Yeah, so that's
Christ.
that's basically the transaction volume that we have here. And then monthly active address volumes we have is 33 million. And now let me remind you that the Stablecoin Act, which will give clarity to all of these regulations, let's say, which will give clarity to every company and every crypto projects that are building stablecoin infrastructures and payment rails. The Genius Act, it only got passed like a couple of weeks ago. So
Okay.
yeah, so
Oh, the
before,
Genius Act that we talked about
yeah,
in the
exactly,
first episode, I believe.
yeah, it's the Genius Act. and it only passed 2 weeks ago. So
Mm-hmm.
like this number is going to exponentially increase over the
Yep.
next few months as more and more companies start building their own stablecoin infrastructure,
Mm-hmm.
and more businesses start using stablecoin as a payment method and a currency. So as we can see from what we have so far, as I said, USDT is by far the most dominant one,
Mm-hmm.
staying at 152 billion, and then comes USDC at about one third that size at 58 billion, and then there are other currencies doing their stuff. Actually, if you can,
And by the way, what are the numbers that say
that's the market
251?
cap. That's the market. That's how many stable coins exist as of now.
Ah,
Like there are 155 billion USDT, 159
mm,
billion USDC. If you
got
like,
you.
and as you can see, like the top 10, top 15, all of them are USD.
Mm,
And like look at the like fourth to last is the EURC, so that's
yeah,
the Euro
that's from
stable coin.
Europe.
Yeah,
Mm-hmm.
yeah, and that they also have not bad numbers at all. Like they have like
Mm-hmm.
255 million circulating supply as of now. So and that number is also going to increase as Europe has their own regulation, which is obviously by far like
Right.
extremely stringent, but they are making place for stable coins and tokenization to come in place in Europe. So yeah,
Mm-hmm.
we'll see what happens there. But this is what we are looking at in terms of stablecoin market caps, and how important stablecoin really is. Because as I said, stablecoin is going to be the gateway of tokenization. Like when all of the other asset classes come in to the blockchain, then stablecoin is the only way that you can invest in
Right.
these assets, right? You can trade these assets. That the stablecoin is going to be the only currency. So like when the US Treasury market, which is, I don't know, like a $30 trillion plus market, when that comes in, when global bonds, private credit, commodities, and obviously stocks, and then futures, perpetual futures,
Mm-hmm.
and other derivative assets comes in, then the current traditional finance market is, as of I think 2022 or 2023, the estimate was 140 trillion dollars worth of assets, and that's I think excluding commodities. So
Got you.
imagine like, I don't know,
Exactly.
like even half or even 10% of that or 20% of that coming on chain in the next 10 years. That's we are talking about 15 to 30 trillion dollars of assets,
Mm-hmm.
and that 15 to 30 trillion dollars of assets is going to be traded using stable coins, and vast majority of that stable coin is going to be USD denominated. So this is a huge market.
Got you.
um and
Every
how,
time I listen to one of these stats that how
yeah,
far behind TradFi is, it
yes,
just
yeah,
reminds me what you said last in the last episode that the more I know about it, the more obvious it seems that okay, isn't it happening right now?
yeah, exactly. And let's take a look at US Treasuries right now. Okay,
Mm-hmm.
so the tokenized Treasuries right now is sits at about 7.5 billion in terms of total value. So in the first episode, I think we discovered like how the US economy actually benefits from stable coins, because
Mm-hmm.
stable coins are backed by US treasuries, and they are backed by like repos, right? And which is also backed by US treasuries as well.
Mm-hmm.
So the more stablecoin issuers come in the market, the more the demand for US treasuries go up. And what is US treasury? US treasury is debt issued by the United States. So it's basically like I am the United States government. I need money,
Guarantee.
and I basically what I say to you is basically, okay, buy. I am issuing you debt. You buy it from me, and
Mm-hmm.
basically I am the most secure and the most stable government on
Right.
earth with the strongest military. So there is no way I'm going bankrupt. So
Mm-hmm.
like you will agree to lend me your money at the cheapest interest rate possible, and the higher the demand of the US treasuries are, the lower the average yield, the lower the yield goes, right? So
Mm-hmm.
like the average yield to maturity right now is at 4.13% in this tokenized treasury basket. So that means the US government is paying you only 4.1% yield every year, or whatever the maturity is for which is imagine a home loan. Now in the US, interest rates are far cheaper than what the third world countries sees. Like for example, in India, an average home loan interest rate will be starting from about 8%, 8.5%.
Mm-hmm.
If you have very good credit score, maybe 7.5%, but that's the exception, not the norm, not the norm, right? In the US, you will be like, when times were really good, when interest rates were really low in the US, you could get a home loan, a mortgage for 3%, 2.5% interest rate, not more than five, definitely, you know. So yeah, US Treasuries directly benefits from stable coins, and US Treasuries are going to directly benefit from other kinds of tokenized assets as well. But let's take a look at how the treasuries itself are being tokenized by companies like BlackRock, by companies like Franklin Templeton, Ondu, and there are other asset issuers as well. Like we have got Securitize, Wisdom
Mm-hmm.
Tree, a bunch of other stuff. So what they're essentially doing is they are buying the US treasuries from the traditional market. They're bringing them on chain, and they are issuing a tokenized version of the treasuries, and they are saying, okay, like if you are unwilling, or if you don't have access to the US treasury markets through traditional means, why not just come on the blockchain and buy it from us? Like, oh, obviously we are going to set some restrictions, like on who can buy it, what kind of documents you need.
And what's the benefit that the company that is issuing getting?
um, in general, they will be charging you a transaction fee.
Uh,
They will be charging you some sort of fee, and then on top of that, other indirect benefits as well, like indirect profit resources.
and I believe like companies like BlackRock are trying to branch out in the crypto space as well. So,
Oh yeah, yeah, yeah. Like BlackRock by far has the strongest grasp of crypto, and they have been buying bitcoins for the last 2 years, like exceptional amount of bitcoins. They have their own Bitcoin ETF. I explained ETF in the last episode, right? And so ETFs are basically, you have the reserve asset, and based on that reserve asset, you issue like 1:1 pegged tokenized assets. And
mm,
that's pretty much what an ETF on chain looks like. But in traditional finance, what you do is, if you for some reason you don't want direct exposure to an asset, instead of buying that asset directly, like instead of buying physical gold, you want to buy paper gold that you can trade more
mm,
easily. So that's what a gold ETF looks like, and that's exactly what BlackRock is doing with bitcoins. Like they're buying the bitcoins, and then this is like reverse tokenization. The Bitcoin ETF is exactly reverse tokenization. They're buying Bitcoin on chain. They're uh, treating it as a reserve asset, then issuing like paper Bitcoin on the traditional
uh,
market at a one-on-one value. So if you are, let's say, if you are an unsophisticated investor who don't have any idea of how crypto works, you don't know how to open up an account in an exchange, or you
mm,
don't simply want to because it's too gray of an area for you, then
mhm.
you go to BlackRock and you buy their Bitcoin ETF, which is traded on Nasdaq or the New York Stock
I
Exchange. I'm
see.
not sure, and you buy it from there. And when you are filing for your taxes, you can show like, okay, I bought this Bitcoin ETF at this price, I sold it at this price, I either booked a profit or I booked a loss. Either ways, it becomes it's congruent with what your traditional market portfolio looks like. It becomes one single part of it.
Got you.
Yeah. So so ETFs are like Bitcoin ETF is a reverse tokenization, and tokenization is, it's basically bringing an asset which sits off chain. You own a lot of it, and then you issue a direct replica
To
of
other
that
people.
asset
Hmm.
on chain. Yeah, that's it. And again, then how do you buy this US treasuries on chain, tokenized US treasuries on chain? You use stable coins.
Stable coins.
Yeah. And then moving forward, just to give you a breakdown of who owns how much of this market. So the entire tokenized treasury market right now is at 7.5 billion.
Hmm.
uh, BlackRock itself owns about like 2.8 billion of this, and then there are other asset issuers who own the rest of it. The second one being like this Benji here. This is Franklin Templeton,
Ah.
and then you have got OUSG. OUSG is Ondo. Ondo is a crypto company. Maybe we'll cover it some other day, like what exactly they do. They are also
Hmm.
into tokenization and RWA stuff. Remember, I told you about RWAs in the last
Yeah,
episode,
real
right? So
world asset.
RWAs, yeah, it's tokenization. We just call it like real world assets instead of tokenization. And yeah, actually, you know what? Let me go back a bit.
Mm-hmm.
So how what I just told you about the total stablecoin value right now is at 241 billion. So this is like the biggest asset in the tokenization asset class category. But then let's take a look at the non-token, non-stablecoin RWA asset category, which is
Mm-hmm.
this is the current value right now at 25 billion.
Okay,
Uh,
explain me what's the difference.
the difference is this is stablecoin, 241 billion. This is everything other than stablecoins. So this is all the other tokenized assets minus stablecoins.
Ah, got you.
Yeah. Yeah. So far, we have seen a meteoric rise from the stablecoins. But
Mm-hmm.
actually, if you take a look at this list, this chart here, back in, can I see that?
Yeah, yeah. Hover over it on the left, top left of the
Yeah, yeah,
box.
yeah.
Top left when you're hovering over it.
No, no, that's okay. Yeah. So basically, if you take a look at it here, like the other assets are actually also rising at a significant level. Like
Mm-hmm.
U.S. Treasury debt was only at like 1
One
million
million.
at in 2022, and then it grew to a billion, two
Jesus
billion, you
Christ.
know,
Right.
and now right now it sits here. So this is a fascinating part, fascinating growth over the last 2 years, and this growth is only going to uh, go up. You know, like it's going to be exponential. Like it's going to be even much more extraordinary than what it
Mm-hmm.
seems like today, just because all of the regulations that we have got coming in, all of the companies that are now clearly showing interest in crypto, and
Mm-hmm.
yeah. So yeah, let's continue. So after US treasuries, we have got the same thing, but this is global bonds. So this is global treasuries, not just the US. So
Ah,
we have got
the highest is
Euro.
Europe, right?
Yes. So you have got Europe, you have got other countries. This is not a huge market as of now. It's just sitting at over like 308 million dollars. But this number is also going to change very soon. Most of it is going to come from the Europe, and then Saudi Arabia is also looking into launching their tokenized
Uh,
bonds.
what do you think will make it sooner? Like, what is stopping them right now? And
It's a regulation. You know, it's like
so once they get sort of that validity from US when they see the crypto
yes.
space in US growing, so other countries will also come in, chip in,
Yes,
is it?
exactly, exactly. So US in general, for what the like last few decades, US has been the flag bearer of financial innovation. I mean,
Uh,
it's not the last few decades. It's like last couple of centuries actually.
mm,
US has been the flag bearer of financial innovation. So everything that US does, other companies they follow suit.
that will impact globally, right?
Yes, yes, exactly. They want the US to make all the mistakes and take all the
Uh,
risks, because obviously like US has got a
the strongest
much,
currency as well.
yeah, it's the strongest currency. The cushion is very strong in US's case. So they just wait and see what's going on, and they are much more like they're playing it much more safe, you know, say safely than any other than US basically. So that's where we are at. But actually things are changing quite rapidly. For example, Dubai, Saudi Arabia, they're very interested in crypto. They're doing a lot of like they're creating a lot of committees, speaking with a lot of startups, creating some lucrative schemes for startups to
Hmm.
move into their countries and build there. But will have to wait and see. Like, I mean, obviously, if we can capture the oil money that's coming out of the Middle East and
Right.
bring it on crypto, it's going to change everything. Like, if we can tokenize crude oil and bring it on
Exactly.
crypto, imagine
Yeah,
what's going to
yes.
happen, right?
I haven't even thought about it.
Yeah, yeah, yeah. And so, you know, like the funny story of the crude oil is like the crude oil is what backs the US dollar. Like that's exactly
Ah.
where the power of the US dollar comes from. The vast majority, like 90+% of crude oil across the globe are sold in US dollars. So like if you are a country that wants to buy oil from an OPEC nation like Saudi Arabia,
Mm-hmm.
you have to pay them in dollars. And this deal was made back in the 1970s, when there was a oil crisis due to some geopolitical issues. There was like there was this war between war in the Middle East, the Yom Kippur War that happened with Israel and a couple of other Middle Eastern countries that essentially that impacted and disrupted the oil supply. So what US did was US made sure that never again does that happen. So US gave Saudi Arabia a deal. They basically said like we are going to sell you a lot of weapons. In return, you cannot
Mm-hmm.
sell
Ah,
you cannot sell oil in any other currency other than the USD. And that's basically where the power of the USD comes from. Like you, oil continues to be the primary material, a primary resource, primary fuel that is fueling our civilization, right? And it's completely controlled by the USD.
right.
Yeah, so this is fascinating stuff, like the deeper
Exactly.
you dig here, the more information you get. Then I will slightly skip over private credit and go into commodities. I will come back
Mm-hmm.
to what private credit is.
Commodities are gold, silver, and
Yes, yeah. So
stuff
it's
like
it's
this.
your it's your precious metals, it's your agricultural products, it's anything that is physical. So the market cap of commodities is not insignificant either. It's like 1.62 billion,
Mm.
which is like Pax and Tether Gold being the two highest issuers. Pax is sitting at about a billion, and Tether Gold is sitting at about 671 million.
Mm-hmm.
Again, it's the same thing. Like if you want to buy
And what's the blue graph below?
this one,
Yeah.
this is the size of the market.
Overall size of the market.
Yes,
Right.
yeah, that's correct. So if you want like exposure to gold, but you want to do it through blockchain, you go to Pax, or you go to Tether Gold, which is the XAUT ticker here, and you buy it there. Again, with what? With stable coins.
Right.
Yeah. And then we have got like institutional funds. Institutional funds are, how much do you know about private equity? Private equity is basically, there's venture capital that invests
Mm-hmm.
in like early stage companies, and then there is private equity which buys like full scale companies, and then they take it private. Like let's
All
say
right.
a company that is trading on the stock exchange, on any stock exchange, the private equity company will come, they will acquire the entire company, they will take it private, and they will manage it however way they choose it to be.
Mm-hmm.
And this is a very profitable venture, because it's completely leveraged by debts, and these people are essentially mercenaries. They will take a perfectly well functioning business, and they
Mm-hmm.
will suck it dry to make their money, and they will destroy the business and then sell it for parts. That's basically what private equity does, but it's extremely profitable.
And here they are basically here tokenization comes as in
As in,
people
now you get to
with
invest in
not
private
much
equity as
money can invest. Is it?
well. Basically, with tokenized private equity funds, what you can do is now anyone can invest and
Right.
get a share of the profit that private equity earns. So one of the primary issues with all of this like institutional funds is there is
Mm-hmm.
a cap. Like there is a keep the poor out cap. Like
Right.
the minimum investment amount will be like $500,000, $5 million, something like that. That's going to be the minimum, the lowest ticket that you can
Mm-hmm.
invest in a firm like this. So like this is not an option for your average retail investors. But when you tokenize it and you bring it on chain, then you can fractionalize it easily as
Yeah.
well, right? So instead of buying in at $5 million, you can buy it at 5,000, or maybe even
Mm.
$500. And one of the primary issues now we are going to have to figure out is who gets to invest. Like in a market, you can pretty much invest in the stock market as you choose, but
Mm-hmm.
as long as you have done your KYC with your stock exchange, and like
Right, right, right. I
yeah,
see what you're
like
talking about.
so, but like but what do you do in crypto? Like these
Mm-hmm.
are fairly sophisticated financial instruments that, like,
Exactly.
this is not for the layman. This is not for
Right.
someone who thinks, okay, like I have got $1,000, I'm going to put it here and just gamble with it and then lose all of it. That's
Mm.
really not productive at all. So I think it's fair to say that there will be some sort of an investment accreditation scheme somehow. Like either they are going to require you to do KYC to invest.
Mm-hmm.
Like they obviously still they do. Like you cannot just go and invest in the BlackRock Middle Fund. You will have to do a KYC, and they still have, like, I think it's the minimum $5 million buy amount even in the tokenized treasuries. But
Uh,
once they start fractionalizing it, because this is early days, they are purely mimicking what they do off chain. They're doing exactly the same thing on chain, but they're just using blockchain right now. But very soon, as they get more and more comfortable with the idea, as more and more retail investors show interest that they want to get a piece of the action,
right.
then they will have to figure out how do you present this asset class to this new bunch of completely
Mm-hmm.
unsophisticated newbies. uh, for example, like you cannot, like as an average investor, you cannot invest in a venture capital fund, or you
Right.
cannot invest in a company as an angel investor, because you are there is a limit. In the US, the limit is $25,000. That's the least you can invest. And you have to pass the investor accreditation test, where you show them that you are financially literate enough to judge the risk and reward of this investment. So I think something similar to this will be introduced here as well. We'll have to see. In a completely decentralized world, none of this exists. Like none of these
Right.
restraints, none of these barricades exist. But I don't think we will be going to living in a completely decentralized world
That will be
when we are,
chaos.
yeah, like when like these companies are not going to go completely decentralized. They're going to
Mm-hmm.
hold on to the reins as much as they could.
Yeah, even that's a good point. Like, why would someone just let a random person come and buy in?
Yeah. So
A person with like a person who is rich enough to invest and be indulged in private equity and venture capital won't, like, why would they give other people, like people poorer than him or her, give a chance?
yeah. So basically, the answer right here is there is the power in numbers, right? When like uh, this is when you are tokenizing something, you are giving access to the entire world, and
Mm-hmm.
the entire world. Like if you set the minimum ticket at $5,000 and a million people invest, that's a lot of money.
Right.
Yeah, that's how it's going to work. Like they're going to see the numbers, they're going to see the investor interest, and they're going to want to lower the barricades and lower the barrier to entry, and let more people in, which they wouldn't otherwise, because regulations restricted them from letting other, like, unsophisticated investors in. So yeah, we are going to see some major changes in these categories, especially with the fractionalization feature. We are
Mm-hmm.
we are going to see a lot more accessibility and democratization of access to these asset classes that were previously untouchable
Yeah.
for retail investors. Okay. And then we have got tokenized stocks. Tokenized stocks is actually one of the things that I am most excited about. Like for example, if you want to trade a stock that is currently listed in Nasdaq or on New York Stock Exchange, if you are a foreigner, it's fairly complicated for you. First of all, like to just get access to this asset, you have to go through a bunch of hoops. You have to have, like, either a domestic account that lets you invest in foreign
Mm-hmm.
assets, or you have to have a foreign account, and then you have to go through domestic intermediaries to get to that, and then you invest. uh, there is a currency conversion issue, then you sell it, then there is a question of taxation issues, and what happens to the dividends that you get, and etc etc. So this is a fairly complicated market. Like I have been investing in some ETFs in the
Mm-hmm.
US. Like there's a Vanguard ETF, there are BlackRock ETFs in different ways, and I've been using something or the other platform, but it's not an easy process to do it. And we in India we have a fairly well built financial market, and we have got we have fintech platforms that are very capable and very strong, almost basically comparable to US based investment platforms like Robinhood.
Mm.
So we are good. But what about like other countries that do not have such sophisticated platforms? Like how if they want to get access to these stocks, how do they do it? Like if I want to invest in Tesla or in Nvidia, but I am based in
Right.
I'm based in Uganda,
Venezuela, let's say.
Venezuela. Yeah, exactly. How do I do it? You do it through the blockchain again. So these companies, they are bringing in tokenizing the stocks. They are putting it on blockchain. Now you have your stable coins. You go and you buy a bunch of Teslas, and you buy a
Mm.
bunch of micro strategy, and buy a bunch of Nvidia shares. You know, and the stocks are going to be behaving exactly in the same way that they do in the normal market. You buy it, you sell it, you interact only with the blockchain. That's it.
Got it.
It immensely simplifies the
Yeah.
process.
Takes
Yeah,
out so many like obstacles that doesn't need to be there just because of there are of physical borders.
yeah, exactly. That's the point here.
And
Now
what is EXOD? What's that on the graph?
I
Do
have
you
no
know
idea.
what company
Let
is
me
it?
check. What is EXOD? EXOD. Okay, so this is
Exodus.
Exodus movement. This is so this is the name of this is a private equity company. I've very little. I don't know what this company exactly is,
Hmm.
but well, good for them because they are
Yeah,
they have the highest number in terms of the market cap here, right? 294 million. So they control almost 60% of this entire market.
almost half. Yeah, more than half.
Yeah, more
Right.
than half. Yeah, yeah. Yeah, so I skipped private credit. Let me go back
Hmm.
here. So you know how I showed you, like the in terms of the total asset class, excluding stable coins, it's to $25 billion, right?
Hmm.
And if you see here, like this
It's
market alone
14.
is 14 billion. So that is like it's 55% of the entire market is private credit.
Hmm.
So this is a market that has actually found a product market fit instantly. Like this is the growth chart of the private credit market, tokenized private credit market over the last 3 years, and as you can see, it's just going up
Yeah, that too in
exponentially.
just 3 years.
Yeah, and there was this jump here, and right now we have got
Why
like
exactly was the jump there?
I need to see what's the date here. This is February of 2025. Don't know for sure what exactly happened. Um, Okay, so this new company came in. So this company called Tradable, they came in. As you see here, like there's Figure and
Hmm.
Maple, and you come here, and then there's Tradable.
Ah,
Yeah. So this new company
I
with like
see.
$2 billion came in. Yeah, so of all the tokenized asset classes,
Hmm.
my knowledge of private credit market is the least. Like I have a very hazy understanding of what they actually do, but they're a pretty big market in the traditional finance world. So to give you a brief explanation of what private credit is as the
Hmm.
name says, they issue private loans to small to mid size, and even in some cases like large companies. This will be companies in real estate, in consumer roles, consumer loans, small business loans,
Hmm.
and stuff like that. And these loans in general, these are obviously like whenever you are issuing small scale loans to companies, the risk is going to be extremely high.
Right.
So as you can see here, the average APR here is 10.36%. APR being the interest rate.
Got it.
So yeah, so whenever the risk is high, the interest rate is obviously going to be high.
Okay.
But so far, again, like this market was virtually out of access for retail investors in the traditional finance world. But
Ah,
since then, they
I
have
see.
managed to bring it on chain and fractionalize it, so anyone can get access to, like if you have the risk appetite to deal with assets like private credit, then
Hmm.
you can basically go there. They fractionalize it for you, and you can invest for as little as, let's say, $10,000, which is obviously not a small
Oh,
amount.
yeah.
But when you compare to the previous limit of 500,000 or $1 million,
Mm, yeah,
it's
right.
significantly small, right? And if you, yeah, as I was saying, like if you have the risk appetite and you want that return of 8 to 10 to 12%, then it's the perfect asset class for you to go in.
Hmm.
Yeah, so yeah, this is pretty much all of the asset classes that we are looking at right now in terms of that are the most poised to get tokenized. And then there are other illiquid asset classes as well. Like as I was speaking earlier, like in a previous
Venture
episode,
capital, is it?
not venture capital. It was like illiquid assets, like let's say alternative assets, which will be your classic cars, your painting
Ah,
collections, your collectibles. These are extremely illiquid. So like if you own a piece of Picasso, and you don't want to sell the whole thing, you
right.
tokenize it, you fractionalize it, and someone gets to own a piece of Picasso for $10, or even let's say for like
I
a
think
race.
once that happens, it even won't be a flex that I own a Picasso
Yeah,
painting.
yeah,
But
exactly.
also, there can be an interesting tangent, but also that doesn't that reduce the value of the Picasso painting because now that everyone can access it.
Not necessarily. So it's not scarcity that drives the value of a Picasso. It's market demand. Like there is a finite amount of Picasso. Like there are
Hmm.
no more Picasso paintings that are just coming out, right?
Right.
So there is a finite amount of
Uh,
Picassos, and the more people want to buy it, the higher the price goes.
I
Yeah,
see.
like it's not owning a Picasso is not so much a flex as it is investing in an asset. Maybe, let's say, maybe you buy a flashy car from Lamborghini, and you think that they're only going to create like 100 of this, and suddenly they realize that this car is in demand, and then they manufacture 1,000 more, and then the flex, the scarcity goes down, right? And everyone has it, so it goes down. The the best example of a flex destroying a market, it has to be the tulip mania of the 1700s. Do you know about the tulip mania?
No. No.
So like the tulip flowers.
Mm-hmm.
So in the late 1700s in Denmark, no, it was in Netherlands. Yeah, so this is no, not the late 1700s, it's like the middle 1600s.
Mm-hmm.
So tulip bulbs, like the flower, it was essentially like when you have tulip in your house, that means you are a rich person. Yeah.
Oh.
Yeah, so what happened was like everyone started flexing, like, look, I have this amount of tulip in my garden, or I have
Mm-hmm.
this much tulip in my vase. So they see it like other people, okay, like if I buy tulip, other people will think I'm rich, and they just keep buying tulip, and the price of tulip went insanely high for like
Uh,
7 years. And farmers, like, they just started to like farm only tulip. They stopped for like farming for food and stuff like that, and they just kept buying tulip, and then at some point the tulip bubble burst. Tulips, like, when everybody has got tulips now, what
right.
flex there now? Yeah, so that's the funny story of flex, and how basically oversupply in the market plummets demand. Demand plummets whenever there is oversupply in the market, right?
Mm-hmm.
And like there is another story that this is not a financial story. Like there was a time when pineapples, yeah, pineapples were so rare in Europe. One of the English kings actually uh, stood with a pineapple for his portrait. Like he posed with a pineapple in his,
Is it?
yeah.
Oh
Like
God.
let me see which English king did it. I think it was one of the Georges or Charleses. Pineapple English king.
Charles too, I think.
Charles True.
Charles the second.
Yeah, it's Charles the Second, who yeah, posed with a pineapple. So this is what flex look like. Look what flex looks like. There's another cool story of the color purple. The color purple,
Ah, yeah.
yeah, like purple, it was the most expensive dye. So people
It is
with
very
purple
rare.
clothes were automatically assumed to be rich, well, because they were rich, right? So these are the kind of like flexes, like what we do today with Birkin bags and
Mm.
Hermes shoes. Uh, these kinds of these are. And this is almost funny to say that a handbag can be an investment
Right.
because
Right.
like it's it's scarce. So scarcity is where the value of this of the asset comes from. And then yeah, so there are crypto projects who are fractionalizing Birkin bags, and I don't
Is it?
yeah, yeah, there are, because
Oh
it is
God.
considered it is considered an asset because they are so rare. And like for example, if you go to a Rolex store to buy a Rolex,
Mm-hmm.
you are not getting one. They're not going to sell you a
Yeah,
Rolex.
I
You
think
have to
it's
pay.
invite only, or there is
Yeah,
some
it's
limit
it's
there.
invite only, and not only is it invite only, you have to be on a list for like 5 to 7 years or something like that, and you have to spend like
And I
enough
think
money.
one of your, like, you need to have a connection already there who can almost,
Yeah,
refer.
yeah, a connection helps, but at the same time, you have to prove to them that you are worthy of wearing a
Oh
Rolex,
God.
which is the most ridiculous thing. Like you have to own other jewelries, non-Rolex watch jewelries from these stores, so that they will put you in the list. And then maybe if they're gracious enough,
Jesus
if the
Christ.
fancies if it if they fancy you, then they give you a Rolex. So yeah, that's how scarcity works in this market.
Although, also, I will recommend the listeners to listen to a 4 hour or 5 hour podcast only about Rolex by Acquired. Acquired is
Uh-huh.
this venture capital podcast. I haven't listened to the entirety of it, but much of it was how they have, even though we have digital watches now, but how Rolex has still maintained and even, doubled and tripled the pricing of how analog watches can be priced at.
Oh yeah, yeah, absolutely. I mean, I myself, I am like I want to own watches like that,
Mm-hmm.
because they are so not only like digital watches there for a few years. If you a well-maintained Rolex can go on for 100 years, and you can
Right.
literally pass it to your children, like a symbol of legacy.
Mm-hmm.
So
We have
yeah,
talked about this.
yeah, exactly. This is that's why like Rolex, Audemars Piguet, Richard Mille, these are these companies survive and they thrive because the technology that they are creating is exquisite. Like this level of handcrafted materials are very rare in this world.
It's crazy to think what humans can find valuable. Even though you can check the time just on your phone, but it becomes more than the
Yeah,
time itself.
it's more than the time itself. Yes, like I mean, I sometimes wish that I was born in the 1800s so that I can own a pocket watch. Like I will
Ah, yeah.
reach into my pocket, in my suit pocket, bring it out. Okay, I'll see the time, and then I put it back. It just seems so cool and so
Hmm.
sophisticated. Like
It
you
had a different class.
yeah, you trotting around in your overcoat and your long hat with a stick in your hand. you know
Right.
it's just aristocracy. And obviously if you were born aristocrat, and hopefully not a poor guy
Mm-hmm.
who is suffering in the stables. So yeah, there's there's that side of the conversation as well, because at the end of the day, like this is the best time. Right now is the best time where anyone can become rich by sheer efforts. And you
Mm-hmm.
don't even have to be born in the United States, which was
Yeah.
like the promise of the American dream. Like anyone with enough hard work and intelligence can become whatever
And
they
of
want to
course,
be.
access to tech, basic internet,
Yes.
and devices.
Yeah. And now that we have access to all of this stuff, you don't even have to live in the US to do all of this stuff.
Like, people say it is just as hard, if not harder, but it has never been easier.
Yeah, exactly. Like just take a look at you and I, right? Like we are
Mm-hmm.
using technology that came from one or the other part of the world, discussing about a market thousands of kilometers away from us.
Right.
But its
It's
effects
crazy
are
to think about.
far-reaching. Its effects are far-reaching, and the knowledge is available enough for us to learn about this and then discuss it. And then there will be people who are listening to
Mm-hmm.
this across the globe. And yeah, it's just the perfect time to born. Yeah, it's the perfect time to live. if you're interested in these kinds of things.
Perfect time for people with grit to live.
Yeah, yeah.
If you're lazy, it's still the same. It doesn't matter how much technology gets advanced.
Yeah, I mean, if you have if you have good enough excuses, then it doesn't matter if it's the 1700s or the 2000s.
Exactly.
All right, man. I think that's enough for today. Let's wrap it
Yeah.
up,
I
and
think
we'll
we had
see
a
you
good
again.
outro.
Yeah, let's yeah, we'll see you next week.
All right
Bye
then.
bye for then.
Ciao.
Ciao.